Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 5th of January. It is 2022. Welcome to the new year everyone. I hope you have a good new year for your trading, and what we've seen is the early theme of 2022 is rising bond yields, and that's starting to mean that equity markets are being shifted on their pivots on the back of that. So we're seeing that there's a slight pullback on the high growth stocks, the NASDAQ pulling back quite strongly yesterday, weighing down the SP 500. The Dow, however, big value sector, they're waiting, and we're seeing that the Dow is outperforming. So it'll be interesting to see if that shift continues as bond yields rise. Now, the rise in bond yields is also causing a little bit of risk aversion we're seeing this morning. We're seeing a slight pullback, but nothing too major quite yet. There's a little bit of a move lower on the silver price, but we're going to be keeping an eye on how these bond yields go in the coming hours and days, I think. Now, in terms of the data points, we've seen that the services PMIs we've got for the Eurozone come out today, and also the ADP employment numbers. US manufacturing PMI was on the ISM was slightly weaker than expected, so it'll be interesting to see if that has an impact as markets go through the week. And these services PMIs are now in focus, and also as I said, that ADP number has an impact potentially for those payrolls on Friday. Now, in terms of the charts we're looking out for today, we've got euro-dollar, which to all intents and purposes remains range-bound, and it can't really break the shackles of that range. So let's have a look at what the support and resistances are like on that. We're also looking out for the gold price, which has been rallying of late, slight little steps higher, but can it continue to move higher in due course? And also looking out for the SP 500 futures. As I said, slight pullback yesterday, but is it still going to be moving higher in due course? Let's have a look. And with the Infinox MT5 platform, we can see on euro-dollar, we've got this trading range that we've seen euro-dollar playing out since the end of November, really. And it's been quite tight, actually. 1185 to 1220 key support area, up towards the resistance 1360 to 1380. And every time it gets towards 1360, 1380, it just tails off. And it's at the moment pretty much bang in the middle of the range. And we can see that very neutral conditions on the momentum. The RSI between that 40 and 55 area, very tight in that, and on the daily chart, so nothing really doing, and it just seems as though it's just consolidating as the downtrend continues to drag lower. Now, looking on the 4-hour chart, you can see again very neutral conditions, even on the 4-hour RSI, 40 up towards that sort of mid-60s area on RSI, but yeah, nothing doing really that we can see on euro-dollar. Very slight near-term support area around that 1270 mark, essentially bang in the middle of the range, and you can see that it's just ticking higher in the early moves today, but essentially very much range bound on that euro-dollar chart at the moment as we start the new year. And moving on to the gold chart, we can see that gold has been picking up through the Christmas period, slight steps higher of higher lows, and we've had a sharp pullback that we saw on Monday, starting to find support again around that $1,800 mark. So that is a key level that I'm going to be looking out for. $1,800, which had been an old resistance, is now supportive, and it ticked higher yesterday, but just consolidating today. And again, it's just lacking this intent of being able to manage to rally. 1830, it hit yesterday, and if you go onto the 4-hour chart, just come back one step, we can see that it has these rallies and then sharp pullback, rallies of about 30, $40, and then sharp pullback of about $30. So it keeps doing that, and you can see these sort of waves of momentum on the 4-hour RSI, and it's just had this pickup, but again it's starting to tail off in the early hours of this morning. So again, I'm going to still focus on that key at $1,800 mark. If that level of support gets broken, that starts to become a bit of a disappointment, and it would obviously then start to focus on 1790, maybe 1785. But essentially $1,800 is that line in the sand for me. If it can hold on to that, then you essentially continue to hold a mildly positive near-term move, but lacking conviction significantly. And on the S&P futures, well, the breakout over the Christmas period above that 4740 area of support was important, and it's pulled back to the mark of 47.47. So support around that breakout area has been found early part of this week. But again, look at this momentum. Not really doing it. Is it 60 on the RSI seems to be the limit? And again, 60 on the RSI, when the market starts to find that as a limiting area, that would suggest it's not really tracking too strongly higher in terms of a trend. You're still in this long-term uptrend channel, that's okay, but it just lacks the intent, and we can see the candlesticks actually on the daily chart just lacking the drive higher that we've seen. We had an intraday high of 48.08 yesterday, but again, just dropping back. But if it can hold above that 47.47 mark, then I suppose that continues to maintain the positive bias. But is it likely to be driving higher at the moment? As I said, the NASDAQ corrective move is a little bit of a disappointment that's weighing on the SP 500, and if that continues, then we're likely to see S&P just struggling for traction, and that could continue. Thanks for watching. I hope you found it interesting and informative for your trading, and I wish you good luck for your positions throughout this year, everybody. I'll be back on Friday where I'll be looking at the key non-farm payrolls report, but in the meantime, I'll leave you with the Infinox support and resistance table, and I'll speak to you then. Thank you very much, everybody.